So, in previous episodes in the series, you've heard about exchange-traded funds, what they are and how they work. Now let's focus on what you do with them in your portfolio. What role can they play in your overall asset allocation? Frank Henze is with us. He's the head of SPDR Exchange-Traded Funds Asia Pacific at State Street Global Advisors. Thanks so much for coming in. For retail investors, Frank, what can they do with ETFs?
ETFs are a very good tool for retail investors because they offer product choice and they offer an easy way for retail investors to access markets they might have otherwise problems or less tools available to access these markets.
So let's say you've already got a portfolio of, let's say, 10 Singapore blue chips. You've gone with your broker to buy, let's say, the banks, telcos, and Singapore Airlines for good measure.
Yes.
Why should you now consider an exchange-traded fund?
The one thing to bear in mind is if you buy individual stocks, they have a very high risk of not performing as you think they ought to perform. So your own portfolio has got high risk characteristics. And I think it's important for investors to look at the risk their portfolio carries to make sure that it fits within their investment objectives. So ETFs, for example, can be used for a core allocation of the investment portfolio with regards to reducing that risk and making sure that that portfolio is tracking the market risk. Market risk is important, particularly as people invest in individual stocks. They take risk of the company risk. It's important for retail investors to make sure that they have the market risk represented correctly in their portfolio and then maybe overlay or invest in other parts of the investment landscape like individual stocks, like other asset classes, like active funds, for example, around that core of the investment strategy.
So it's a little bit like the control rods in the reactor, so to speak. They're there to make sure that any volatility is evened out.
Absolutely, that's absolutely correct. And ETFs are a very good tool. ETFs are tradable on the exchange. They're very easy to access. Any investor with a securities account can access these products. And also, they have a constant market. So you can sell and buy throughout the day. You have to wait till the end of the day. You can buy and sell whenever you feel you need to get and change a position. The good thing is they're diversified. So it's not a single company that determines the risk. It is a basket of companies that determine the risk. And when companies don't perform, they normally fall out of the index and others who perform come in. So there's a safety mechanism within the construction of the index. So that's very good. And then if you move off your core, so like just really the fuel rods when they are in place, then what are the other elements you can use to make your portfolio more, to increase the returns on your portfolios? And there are ETFs, for example, who cover different asset classes, different types of exposure, like sectoral exposure, different countries. You can invest in emerging markets. So you can play around with that a little bit and say, what do I think is an important part that I need to cover through my investment, and invest in ETF to give you that. The second part of that, the environment changes around us. So once we have done our strategy down, that would be great. It will always be the same, very good, but it isn't. So you can look at ways of thinking, okay, this market has less performance characteristics or less future in that sort of way than another market. You can change around and buy a different ETF to cover that eventuality.
In other words, so if you, let's say you have that portfolio of 10 Singapore stocks, first you I guess have to decide that you want to go beyond Singapore's shores, for example.
Yeah.
Then you may not be so familiar with stocks in other markets. So then you buy the ETF on that market.
The first thing you have to decide whether or not holding stocks is the right is right for you. Let's say, for example, if you're approaching retirement age, or if you are not quite as young anymore and can take the risk, you probably want to have an investment tool that mitigates the risk more. That is really important. So it's a matter of the part stage of your life cycle where you are, where your investments are. To your second point, it's absolutely right that people might be familiar with their home market with regards to the companies. They read up in the papers, they understand the strategy and these sorts of things, and they think that the airline industry might be a profitable industry in the future or something else. That's okay, but then when it comes down to foreign investments, it's very difficult for a retail investor or any investor in principle to understand the dynamics, let's say, in Japan, in China, in the US, in Europe. Yet all of these pieces have a valuable contribution to make to one's return. The US, for example, experiences strong growth at the moment, a strong potential growth at the moment. China is a very strong contributor to the economic situation worldwide. So what would you do as an investor? You buy an ETF to take part in the market development. That's really, really very valuable.
Okay, so we've talked about diversification, managing your risk. What are the other common or popular ways that people can use ETFs in their portfolio?
Another popular way is if you have your portfolio defined and you want to react to events and trends in the market. ETFs give you a very good platform for a short-term investment in a certain situation. Let's say, for example, China is consuming a lot of minerals, and that means the sector who extracts those minerals is probably going to have a very prolonged economic growth, path ahead of them, and you want to take part in that, you buy an ETF. So very, very, very tactical. So that's one thing. But you could also, it depends on your risk appetite also. ETFs are stocks by nature. They are tradable as a stock. They're regulated as a fund, managed as a fund, but traded as a stock. And stocks can also be shorted. So if you have the same, you say, okay, there's a country that I think has a short term, probably will lose value. You can have if you have a margin account, you can short the ETF. And that's quite interesting in a way because there are very few other elements of the investment universe that can be shorted through your account with the same breadth of exposure. So there are a lot more ETFs in the market than there are, for example, futures or other instruments. So for a retail investor, if you have a negative view on a certain market, you can go short on a certain market and reap the benefits.
Finally then, Frank, what might be some of the more unconventional ways that you can use ETF to park your money?
That's also a very important part of using an ETF. An ETF is not only there for long-term allocation, but also for short-term tactical usage. And one thing is money comes into your portfolio, you don't know exactly which stocks you're going to buy, which markets you're going to invest in, what you're going to do with it. Lots of investors have too big a cash balances in their portfolios. It's a common phenomenon across many markets that private investors find it difficult to decide on exactly what investment they want to make. In the meantime, while you decide that, an ETF gives you market exposure so that you take part in the development of the market rather than leaving the cash as cash, earning very little interest at the moment. So you have an exposure to the market, and then you can decide while you have that what you want to do on top of that.
And in previous episodes we've heard about that it's relatively cheap to buy ETFs compared to other assets.
It is very cheap to buy ETFs. The expense ratio is very low compared to most actively managed mutual funds, for example, or mutual funds in general. The only other cost you incur is the brokerage fee, which depends on the brokerage that you use, and a trading spread. But that is pretty small because as a provider of ETFs, we make sure that there's many participants who make markets in these products, and that drives down the cost, increased liquidity, and makes the buying experience a more positive one.
Thank you very much for telling us about it today. Frank Henze, the head of Spider Exchange Traded Funds for the Asia Pacific at State Street Global Advisors. Click on the links nearby the screen to get started by opening a CDP account, finding a broker, or signing up for courses and seminars through the SGX Academy.